more about all of that, but first up, let's kickstart with the big story of the day. The government has accepted suggestions of the Kirit Parikh panel on gas pricing. So Sonal is standing by at the big wall with all of the details on this one.
Well, yes, this has come as a material relief to the gas users as the government has accepted Kirit Parikh committee recommendations and has amended as to why gas is and how gas is priced in the country. So let's understand some basics first. India consumes around 150 to 160 MMSCMD of gas totally, out of which 50% or 80 MMSCMD is produced in the country and rest is imported. Out of this, 77 to 78% is the gas under APM or administered price mechanism, and rest is non-APM. Out of the total production, 83% is produced by ONGC and Oil India combined, and rest is basically private players or JVs. So the change that has come about is in the APM gas pricing. Let's first talk about what was the gas pricing scenario earlier. APM gas prices, they were basically decided on basis of a formula, which is the weighted average price of 4 global benchmarks, that is US Henry Hub, Canada-based Alberta gas, the UK-based NBP and Russian gas. It was revised every 6 months and it was set at $8.57 per MMBTU as per the last revision. Now there has been a change to that. Gas prices will now be announced every 1 month. The prices will be pegged at 10% of international price of Indian crude basket, and to protect the interest of consumers, there is a ceiling to this. The gas prices, that is $6.50 per MMBTU, and the floor is at $4 per MMBTU, which is for the benefit of producers. Now it's important to note that ceiling will be maintained for FY24 and FY25, post which this will see an addition of $0.25 per MMBTU every year. Gas from non-nomination blocks of oil and ONGC will have 20% premium to APM prices, and there is no change in pricing regime for difficult fields or any LP blocks. Now, this change was brought about because of the way gas prices moved during the Russia-Ukraine war, as the global supply of gas was impacted. This led to prices in Europe going up by 3 times, prices in the US touching new highs of $9 per MMBTU. This led to higher prices in India as well. And that is the reason why CNG prices in our own country and city shot up by 80%. So that is the kind of move that we saw in 2022 as well. Now let's move on. After talking about how CNG and PNG prices went up, that was the reason why the government went ahead and set up the Kirit Parikh committee. But with the new pricing regime change that has come in from here, we will see that the prices have been set at $9.16, that is April 1st to 7th. Post that it is at $7.92 per MMBTU. But again, the ceiling is at $6.50 per MMBTU. This has come in as a big relief to city gas distribution companies. IGL gets around 80% volumes from CNG and PNG segment, MGL at 87%, and Gujarat Gas at 36%. So the first two tend to benefit the most. As a result of all this, there have been massive price cuts by all the players. MGL has cut CNG prices by 8 rupees, PNG by 5 rupees. We have seen Adani Total Gas cutting CNG prices by 8 rupees, PNG prices by 5 rupees. There's IGL which has cut prices by 6 rupees. GAIL Gas has cut prices by 6 to 7 rupees per kg, and this has come as a relief to consumers as well. But for producers like ONGC and Oil India, in the near term, there will be a hit to their realizations, with both of them seeing cuts of around 24% as per brokerages. But of course, in the longer term, it's a positive because of the floor. Brokerages are positive on the entire city gas distribution space. Jefferies has upgraded the EBITDA estimates by 6 to 20% for all the 3 companies. For GAIL, it will lead to a savings of 1,100 crore rupees for LPG segment due to lower gas costs. Morgan Stanley says that not only city gas distribution companies, new pricing mechanism is a positive for producers as well and removes a multi-decade overhang on long-term returns. And CLSA says despite the price cuts, margins will be positive for MGL and IGL, and this takes discount of CNG versus diesel back to 30% and brings back the pricing power. Government's intent to assure $75 to $80 barrel realization also raises earnings predictability for ONGC and Oil India.
Sonal, thank you very much for that. That's the big story, right, for the day. We'll also listen into what Kirit Parikh had to say on this development.
The APM prices recommendations that we had made were following that it should be fixed within a floor and a ceiling price, and that is accepted by the government. The same floor and ceiling we had suggested, $4 per million BTU and $6.5 per million BTU. I think the consumers will are getting cheaper price for the PNG and CNG supplies. Second measure the government has taken is that it has provided 20% additional money or price increase for gas that is produced by ONGC and OIL.
All right, that is the word coming in from Kirit Parikh on this new gas pricing. But